Hong Kong has lifted decade-long property curbs with immediate effect and will set aside $130 million to boost tourism. Both industries are regarded as key engines of growth, and Financial Secretary Paul Chan says that the changes will set the city on a faster road to recovery. CNA's Deborah Wong with this report.
The immediate removal of stamp duties for all property transactions is a long-awaited relief measure meant to stimulate the property market. It comes after a partial easing last October barely moved the needle. Transaction volume over the last 2 years fell 40% from the peak in 2021, while home prices continued a downward trend. Financial Secretary Paul Chan said that given the external and local economic situation, there is room for further adjustments. But as buyer confidence still hinges on borrowing costs, will the changes help?
I think people's expectation is that the interest rate will come down second half of 2024, but it's not necessary to be same level as the low interest rate condition like 5 years ago. So still there will be expensive interest rate condition, but it's not as high as 2023. Hopefully, those competition between the developers will able to bring down some of the price, and people believe that this is the bottom of the market, so that stimulate the volume first, and subsequently it will affect positively on the price level.
Mr. Chan also announced a US $130 million fund to boost tourism, a large proportion of which will go to mega events and the revamp of the monthly drone and light shows along the city's famed Victoria Harbour. But with a large US $13 billion deficit on its shoulders, Hong Kong needs to tighten its purse strings and grow its revenue. It's freezing the headcount in civil service and reducing government expenses in the next 2 years. It will also be reprioritizing infrastructure projects, with those in the mature stages moving to the top of the queue. And Hong Kong will also be issuing US $15 billion worth of green, silver and infrastructure bonds to drive the projects. There will also be the revival of the hotel tax and higher salaries tax, which raises questions on the impact of Hong Kong's appeal, given that the city is keen to attract high net worth individuals.
And they must realize, even with this slight increase in our standard salaries tax rate, I think we are still the most competitive international city in terms of salaries tax. And when you compare our tax rate to those in other jurisdictions, hand on my heart, I firmly believe we are still the most competitive.
Mr. Chan estimates that GDP forecast for this year will be between 2.5 to 3.5%, with a revenue of US $81 billion, while spending in the coming year will set the government back by US $99 billion. Deborah Wong, CNA.